This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, July 6th, 2016. Euro dollar. So the euro continues to be focused on the downside with the latest correction stalling out at 111.87 on Tuesday and looking like the market wants to put in a resumption of declines back down towards next key support, which comes in by those 24th of June lows at 109.12, below which would expose medium-term support at 108.23. It's worth noting that Tuesday's price action resulted in a bearish outside day formation. Sterling dollar. So cable remains pressure to the downside with this intense downtrend now pushing back towards the key support and the psychological barriers at 130. The market will look to establish below that level, but with daily, weekly, and monthly studies oversold, it begs the question if we're going to see a corrective bounce over the coming sessions. But at this point, no such correction is in sight, and the market will be focused on next key psychological barriers further down at 125. It's going to take a break back above some previous support now turn resistance at 138.36 to take the immediate pressure off the downside. Dollar yen. So dollar yen remains confined to a well-defined downtrend, and the market could be poised for the next downside extension after recently stalling out, looking for a break back down towards those recent multi-month and yearly lows at 98.99. At this point, it would take a break back above recent highs that we saw at 103.39, 103.40 to take the immediate pressure off the downside. Euro Swiss. So Euro Swiss mostly continues to consolidate off recent lows, though the market has had a hard time establishing below 107 on a close basis. We did see a breakdown recently to 106.23, which was a fresh 2016 low, but again, the market hasn't been able to really establish a close below 107. If we saw a close below 107, that would be a bearish development exposing 106.23 and deeper setbacks back below 105. Inability to establish below 107 will keep the market trading within a broader consolidation, potentially at risk for another bounce back above recent highs that are seen up above 110 and maybe towards the 111.30, 112 range highs. Aussie dollar. So Aussie has been very well capped into rallies, with the market recently stalling out at 76.47 and now looking like it wants to put in a lower top ahead of a bearish resumption. But at this point, we'll need to see a breakdown below recent support that we saw around the 73.05 area to accelerate and strengthen the outlook, with a breakback below 71.45 to really strengthen the outlook and accelerate declines back down towards the 2016 low at 68.27. At this point, only back above 76.47 would take the immediate pressure off the downside. Dollar CAD. So dollar CAD continues to show the formation of a meaningful base, with the market now looking poised for fresh upside. A break above 31.89 will strengthen this outlook and accelerate gains up towards next key resistance in the 135 to 140 area. Only back below 126.55 would negate this constructive outlook for dollar CAD. Kiwi dollar. So Kiwi has been very well bid in recent trade, with the market trading up to as high as 2016 highs at 72.97. But rallies have been well capped, and the market has put in another reversal day on Tuesday to suggest we could be once again poised for downside. A break back below key support at 69.63 will strengthen this outlook and accelerate declines towards 66.75. SPX 500. So the S&P 500 has put in another bearish formation after once again stalling out above 2100. We've seen the market stall out numerous times above 2100, which is just shy of those record highs from 2015 at 2133, and another topside failure on Wednesday will help strengthen this outlook. Ultimately, we would need to see a breakback below 2065 to get the pressure going back to the downside, but again, rallies continue to be very well capped in this market, back above the recent highs that we saw from earlier this week at 2112, 2113 would negate and then put the pressure back on the top side, exposing a retest of those record highs. But again, the market continues to show signs of stalling out above 2100, and if we see a breakdown below 2065 on Wednesday, this will strengthen the bearish outlook. Gold. So gold is once again breaking up to fresh 2016 highs, with the market taking out the previous 2016 high at 1359. This now opens the door for fresh upside towards the next key measured move objective at 1400. Any setbacks in this market should now be well supported down towards 1300, with only a breakback below 1250 to really compromise the constructive outlook.